closing bell has just rung on Wall Street, and another session is in the books. I'm Grant Mercer, this is Storm Stock Solutions, and we're here to bring some clarity through the chaos of today's markets. Today's tone into the close was a bit of a split screen. Resilient markets on one side and rising anxiety for workers and households on the other. According to new reporting from MarketWatch's Vanessa Wong, employees are increasingly worried about losing their jobs as financial fears build. A mix of lingering inflation, a cooler job market, and the rise of AI reshaping how people work. That's a big backdrop for markets, because if job insecurity spreads, it can weigh on consumer spending and sentiment even when the indexes still look just fine. On the upside side of the ledger, a few themes stood out. First, that worker anxiety story is actually being framed in a way that underscores how central the labor market remains to the soft landing narrative. As long as layoffs don't accelerate, investors tend to see unease more as a sentiment issue than a hard recession signal. Second, according to Charlie Sabgear at MarketWatch, the sports betting boom rolls on, with young crypto bros overlapping heavily with customers at platforms like FanDuel and DraftKings. That speaks to ongoing strength in online gambling and engagement-driven consumer tech, areas traders often watch when risk appetite is healthy. We also saw continued positive attention on Federal Reserve policy. Brett Aaron's piece arguing that Jerome Powell was right all along reinforces the idea that the Fed's tougher stance may have prevented a second inflation spike and an overheated economy. For equity and bond markets, that's supportive. It keeps the soft landing, gradual easing story alive, and can help justify current valuations, at least for now. And on the personal finance front, Beth Pinsker's article on solo 401ks and maximizing savings for side hustlers highlights a constructive theme. People looking to boost long-term investing and take advantage of higher contribution limits, which ultimately can feed more capital into the markets over time. On the flip side, there are clear areas to handle with care. Jenna Contino's reporting points out that Americans are heading into the new year with record levels of debt, particularly in high-interest credit cards and auto loans. Even if the Fed cuts a bit, those borrowing costs don't fall overnight. For markets, that raises questions about consumer-facing lenders, autos, and retail. Do we see more delinquencies, slower discretionary spending, or a shift down the price spectrum? There's also a structural affordability issue around essentials. Andrew Reichenberg's piece on food prices calls out Big Ag and the power of large agricultural players as a key driver of the food affordability squeeze. That can pressure household budgets and, over time, may attract more regulatory and political scrutiny toward big food and agriculture names. Stepping back to macro and policy, the day's stories collectively paint a picture of an economy that's stable at the top line but uneven underneath. On one hand, the Powell soft landing narrative remains intact, and workers still have jobs, for now. On the other, you've got rising job insecurity, record household debt, and stubbornly high costs for basics like food. That combination helps explain why Wall Street can look confident even as Main Street feels stressed. Volatility reflects that split as well. Joseph Adinolfi at MarketWatch notes that Wall Street's fear gauge, the VIX, is on track to finish the year near its lowest level since late 2024. Low volatility often means investors are comfortable, but it can also mean they're under-hedged against surprise shocks. That's a key watch item for professionals heading into 2026. In terms of sleepers and watchlist themes, quantum computing is one that keeps popping up. Charlie Garcia highlights quantum stocks as being roughly where AI was 5 years ago. Early, speculative, but with real science behind them. That's not a call to buy or sell, but it is a reminder that alongside the day-to-day noise around rates and jobs, there are long-duration tech stories quietly developing in the background. Into tomorrow's session, I'll be watching three things. First, how job loss fears and record debt shape consumer confidence data and commentary from retailers and lenders. Second, whether the sports betting and high-risk appetite pockets we're seeing in names tied to gambling and crypto-adjacent activity remain strong or start to cool. And third, if that low-vol VIX environment persists, or if we see any early signs that traders are starting to price in more risk for 2026, we'll break all of that down for you in tomorrow's pre-open report and continue to connect these macro undercurrents to what's actually moving on your screen. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,